Good morning, everyone. All right. So I think I just want to appreciate the KBA consortium and its members for even looking at high level what we are discussing, and it is navigating the macro imbalances and responsiveness. I think as a country we've gone through a lot, and we do know that, we are not only discussing the macro imbalances, we also discussing other externalities that could actually affect our business and affect our customers as well. So I have seen very interesting topics. It is my first time to be in such a forum. So as Raymond says, I'm going to simplify the language, perhaps speak vernacular at some point. Just to keep it home, isn't it? Yeah? Yeah. So members of the Governing Council, KBA member bank CEOs, the KBA acting CEO Raymond Molenje, the AERC's executive director Professor Victor Murinde, Jared Getenga, allow me to recognize you, the researchers in the room, the media practitioners, distinguished guests, ladies and gentlemen. I'm Jamboni. So, as you've heard, my name is Betty Korir, and I'm glad to be with you this morning in this opening ceremony of the 13th Annual Banking Research Conference. And I stand here really as the Vice Chair of the Kenya Bankers Association to really foster this generic theme that we are calling banking sector resilience, and that is navigating the imbalances and responsiveness. So in what I could perhaps describe, and I did actually threaten to speak vernacular, I'm about to speak it now, in what I could perhaps describe as Kiluya Sheng. I'm not Luya, by the way. We have encountered the expression of, I think you've, for those who understand it, there's an expression they say, if I don't say it right, don't judge me. They say, Evindo Vicheng Shanga. Is it right? Is it rightly said? Yeah, and that is to say that things are changing. So why do I like this Luya Sheng? It's because I was in a position to poach someone to work for us way in the village. And just because, this person is head of security, you know what that means, yeah? Connoting what that means. Just because, he got new uniform and everything, all of a sudden, the, 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 how do I put it? The way he carries himself, the way he speaks. So every time I speak to him, he uses this word. He speaks this Luya word, and that's why I needed to just reflect on it. He says, Evindufi Cheng, Jang. I don't know what it means, but I guess it's to say that things are changing, and they are changing pretty fast. And of course, none of us would disagree. And furthermore, we all agree that things are really changing very fast. The banking terrain, as we understood several years ago, has really changed. We thought we were doing the usual intermediation, of getting deposits and being able to lend. All of a sudden, we wake up and we discover the telcos and other players, fintechs are in our space. We now begin to realize that there's digitized banking, there's embedded banking. So I love the fact that we are looking at, the changing terrain to try and embrace it and really have an in-depth conversation. I have had a chance to interact with Tiriongo of KBA. Suddenly his language is not simple, so the sooner the rest of us vacate this room, the better, so that we don't look quite awkward and ask, questions that are out of place. And the more reason for us to acknowledge the importance of research, so research really is anchored on the premise of there are knowns and unknowns, there are constants and there are variables. So really, this is the essence of the forum today. And I know I am preaching to the converted if I should remind you of that importance, yeah? So research is essential in any field as a driver of innovation, an informer on decision making, and a solver of problems. It really helps to demystify the complex issues, to explore new ideas, and to come to solutions based on evidence and verified information rather than simple conjecture. So the question one would be then, how do we navigate this economic complexity? How do we innovate? How do we survive? How do we remain afloat? How do we actually relate our business models to the customer needs? And more importantly, how do we continue to run our business amidst, the turbulence? We all do know that in our farthest, farthest assumptions, we had no idea COVID was going to come in. So now we're not only dealing with COVID, we are dealing with headwinds. And I mean, no one thought that there would be supply chain disruptions emanating from wars, that are outside. I mean, the geopolitics, we didn't envisage that. For a long time, I think we've seen this government coming to the media and actually advising all of us on what they are doing on the fiscal debt burden. We are aware as an industry that there are dire implications of the country downgrading to C triple A1. It actually comes with a solid residual risk. And that simply implies that we're going to be getting external debts much more expensive. And of course, the ripple effects will be felt across the sector. So as we engage in this conversation today, I think the questions that we're then asking is, what next? So the challenges will require the players in the financial sector really to foster an environment that encourages proactive thinking and strategic responses, ensuring we remain at the forefront supporting the national socio-economic development agenda. Also, as we engage in the discussion in the next 2 days, we have to really put in mind the resilient factor and to really understand that we are global players as it is. So really to think outside the scope of this jurisdiction or COMESA or Pan-Africa to really be able to bring relevant solutions. And of course, happy to note that some of the papers lined up for the conference focus on sustainability. I think sustainability, and I stand here, before I was appointed to my role as a credit professional, we had various factors that we would actually consider, for credit approvals. But now we have to embed the environmental risk factor. And I would tell you, when I sit with the statistical or scientists that we have, it does carry a higher weighting. So it's definitely a relevant conversation that we need to have today. Over the last decade, of course, the Kenya Bankers Association Sustainable Finance Initiative has successfully mobilized the industry players to integrate the environmental, social, and governance, or ESG principles and sustainable into our core operations by prioritizing sustainable practices as catalysts of growth. We then do have the responsibility to advocate for policies that promote fair and enabling environment for the sector, and of course contribute positively to the nation's development and transformative agenda. As I conclude, I would like to encourage all of you to engage actively in the conversations and insights. We take advantage of the brains in the room. Those who speak complicated language are not vernacular like me. And finally, on behalf of the KBA Governing Council, I'd like to extend our gratitude to the researchers, the discussants, and all those who worked tirelessly behind the scenes to make the conference a success. Your dedication to producing high quality research and facilitating meaningful discussions has been instrumental in shaping the future of our banking sector. Of course, I would also like to acknowledge the CEOs in the room, starting with Rao. Thank you for joining us and all the representatives. I also acknowledge in Central Bank of Kenya for its continued support and guidance. The insights generated through this conference year after year have found their way into policies and strategies. So we're not just having conversations, it's really going to shape the policy framework in the days ahead. And as I wish you a fruitful conference, remember my vernacular of Evundu Vichenga. Things do change, and we must change with them. I think I've seen the topic that the professor, our chief guest, is going to discuss, and really looking forward to really gain his insights. Professor, I'm truly honored to be in your presence today. It's a conversations we have in our boardrooms every day at EXCO and at the board level, and even with the central bank in terms of what are our plans. So we do have certain plans that we present via different papers. We have the ICAPs, on sustainability, on capital, really moving forward to even embracing the Basel models which would require capital preservation for operation and market risk. So this is a very relevant topic that we are looking to really understand and really to engage intellectually to gauge whether our models, the models that we had 5 or 10 years ago, are still relevant. So thank you very much, and asanteni.